Anthony, thanks so much for your time. I mean, your view on this rand weakness that we're seeing now, I mean, we're almost at 15 to the dollar today. Your take?
Shame. You know, on the one hand, as an ex-South African, South Africa is unlucky. There's a contagion we all know from Turkey, but we also have to take some responsibility because of the current account deficit in South Africa, the lack of FDI or foreign direct investment. We are susceptible. We're one of the, they call it the fragile five.
Sure.
So although we can commiserate and be upset about the Turks, the truth is we ourselves are not playing totally by all the best rules. Our fixed investment, our foreign investment levels, our current account deficits mean that we are always going to be vulnerable here. And about 30% of our bond market is controlled by foreigners. So the minute you have a negative EM contagion, the bond market is really the big problem. It's not so much the JSE, it's actually the fact that the bond market here pulls out a lot of capital and the rand can really go down quite quickly if you just get a couple of big Wall Street asset managers turning tails. So for me, it always worries me that our bond market is about 30% controlled by foreigners. That's really a bit of a susceptibility we have.
Sure, and of course, I mean, we were talking to an investor earlier saying South Africa once again scoring its own goals. We have put the volume up on nationalizing the Reserve Bank, but let's park our local issues for a second and talk about what's driving the rand weaker globally. Other than Turkey, there's also the tit-for-tat, trade war rhetoric between China and the US. But I see that there's a possibility that we could have some form of amicable outcome there with the Chinese delegation going to meet the US next week about a way forward.
Yes, you know, one has to take a deep breath. I mean, living in LA where I am, and you see a lot of Tesla cars being driven around, everybody being happy, but at the same time, the press being pretty hard on Trump. I think what's happened is that Trump is a business guy. He doesn't play by the normal diplomacy rules. He's upsetting the Chinese, but then they come back a few weeks later. It looks as though a deal will be done. The markets in America, quite frankly, you saw that up another 400 points yesterday. I think the market has not factored in a full-blown trade war. But when it comes to South Africa, the publicity that South Africa is getting overseas, because of the current account deficit, I would say partly because of the unemployment rates here, we don't get the best coverage.
Sure.
And particularly with the land expropriation, it's not really understood. It's a nuanced issue. I understand the president's doing it for particular reasons, and it's maybe not as bad as it sounds in the press. So unfortunately, the press, we do have own goals over there. One other thing that South Africa sometimes suffers from is Americans, particularly, who control a lot of the bond market. Many of my American mates have never been to Africa. They don't really understand South Africa. So unfortunately, it's a lack of knowledge, and we get tainted by other problems. And I think off the back of what happened in Zimbabwe the last couple of years with land issues, it's quite a sensitive topic in the press. So in the New York Times, the Wall Street Journal, the coverage is not nice.
Sure. And of course, many of my South African friends have never been to the US. And I'd like to get your view on exactly what the US is, especially because now we see the US through the media coverage of a president that just seems adamant to overturn any form of policy that was put forward prior to him coming into office, policy that many people say was actually good for the global economy, but his America First stance. How are the people on the ground really taking to that?
Okay, well, the truth is, everybody knows he's an arrogant guy, but they know that he's actually a hard worker. And the fact that the GDP growth under Obama and now under President Trump has reached 4%, he's taking all the credit for it. He doesn't deserve all the credit.
Sure.
But the truth is, the stock market's almost at all-time highs over there. The S&P's basically recovered to nearly yearly highs. GDP growth was 4% this last quarter. The year-on-year numbers on the S&P earnings growth is almost 20% year-on-year growth. So for the average American, their living standards are actually pretty decent right now. I will admit to you that the rich are getting richer in America, and the middle class has a big divide at the moment, because you've got people in the Midwest and certain states in America that will continue to support Trump because they think that he's going to look after them and that he's trying to protect trade issues. And many people do feel wrong that the Chinese over years have stolen their technology. So whatever Trump's doing, there's an element of support that he's got. He's not completely off his rocker, as we say. He's doing things because there is part of his base very frustrated with the Europeans, frustrated with trade. The Americans have felt hard done by, particularly by the Chinese. So he's got some support. I think the problem, when it comes quickly to my friends in America, they see the economic growth in South Africa as very low. They ask, how can you have an African economy growing GDP at 1% a year, 1.4%? I think until we get our GDP levels up beyond 2 to 3%, you can't expect foreign direct investment. You know, these big groups, IBM, GE, others, they tend to go where the economies are growing fastest. And they look at Ethiopia, they look at Kenya, they look at other African economies growing at double our pace.
So, Anthony, the thing is now we have a situation where now the Fed is trimming down its balance sheet, it's buying back all its bonds. Interest rates in the US are rising, so the capital that emerging markets benefited from during the rampant stimulus program is going back home. What does this mean for South Africa's ability to attract FDI, or even the ability of EMs to continue attracting FDI in this tapering environment?
Okay. So on the one hand, people are nervous in the EM markets because the Fed is going to raise rates another 2 times this year. So it's probably going to be around September and again by the end of November. So you're totally right. I agree that it is going to be a threat to emerging market currencies, that more money is going to go back into the US dollar. But the truth is the US dollar is always the fallback place anyway. I'm less worried that the interest rates in America are going to go up by 25 basis points probably September and another 25 bips in November. I'm more concerned that if emerging markets GDP numbers don't look good, that's when you don't get the foreign investment. So I think the Rand payoff, our interest rates are high here. So as long as the currency remains relatively at levels of 13 to 14, that's not the concern. The biggest concern is how do we, Americans all say to me, why can't South Africa get out of this low, slow growth, 1%, 1.5%, we're middling around, we've got population growth in excess of our GDP. So the biggest problem, when you talk to the average guy on Wall Street, they don't get into all the details of the land expropriation issues. They get more into, on face of it, why is the GDP unable to sustain 3-4%?
Sure. So that will certainly hinder the president's plans of attracting, is it 1 trillion, 5 trillion for the next 5 years? I need to get my numbers correct. Anthony, thanks so much for your time.
Thank
However,
you.
That was Anthony Ginsberg, Managing Director at GinsGlobal Index Funds.